All right, today we're going to tackle something pretty complex, a deep dive technical analysis report on Tesla's stock. Our goal here is simple, to slice right through all that Wall Street jargon and figure out what the data is really telling us about one of the most talked about companies on the planet. Let's get into it.
And that leads us to the big one, the million-dollar question, isn't it? This is exactly what this whole report is trying to figure out. And by the time we're done here, you're going to understand all the key signals the experts are watching to make that exact call.
Okay, so the report's conclusion, right at the top, hits us with this really interesting phrase, bearish momentum. That sounds bad, right? Downward. But then you have oversold signals, which kind of hints at a comeback. So what's going on? Well, this is a classic case of the data pulling in two completely different directions. And that contradiction is exactly what we're going to unpack. So let's start with the bottom line. We're going to look at the report's final verdict, that one single number that tries to wrap up this entire complex picture. And here it is. The report gives Tesla a technical score of 48.75. You can think of this as a kind of grade for the stock's short-term health, based on all the technical data points. But what does a 48.75 actually mean? Well, anything under 50 is technically considered bearish. It's a signal to be cautious, at least for right now. But, and this is a big but, the report makes it super clear that this number is just an average of a whole bunch of conflicting signals. It's not a simple command to sell. It's more like a mirror, reflecting a stock that's at a really complicated crossroads. Okay, before we dive deeper, we've got to set the scene. Where exactly is Tesla standing in the market right now, according to this analysis? So this is our snapshot in time. And the most important number to lock in here is that closing price, $404.35. Everything we're about to look at is built on that foundation. Now, check this out, because this is really fascinating. The stock is sitting at the exact 50% mark of its yearly range. That means it's not flying high near its peak, but it's not stuck in a deep valley either. It is literally perfectly in the middle, which just goes to show you how uncertain the market is right now. The report also gives us this number, a beta of 0.912. Now, I know, that sounds super technical, but it's actually a pretty simple and powerful way to understand a stock's personality. Think of beta like a stock's volatility score. The entire market, say the S&P 500, has a beta of exactly 1. Tesla's score of just under 1 means it's a little less volatile than the market average. So yeah, it still gets pushed around by the big market waves, but it's not quite as choppy as the sea itself. All right, now that we have our bearings, let's get into the really juicy stuff, decoding the report's technical indicators. We're going to break them down into 3 simple groups to make sense of it all. And this table just perfectly lays out that central conflict we were talking about. You've got 2 groups of indicators, trend and momentum, that are both flashing bearish or negative signals. But then you have this third group, oscillators, that's hinting at a potential rebound. So let's quickly look at what each one means. First up, trend indicators. The easiest way to think about these is like the current of a river that the stock is floating in. And right now, these indicators are telling us that the river's current is flowing gently, but definitely downward. That's our first big bearish signal. Next up, we have momentum indicators. These measure the energy or the force behind the price moves. The report flags something called a bearish divergence, which is a major warning sign for traders. It's kind of like a car's engine is sputtering, even though it's still rolling downhill. The price might look okay, but the power underneath is fading fast. But then, here's the big twist. We have the oscillators. An indicator, like the RSI, the Relative Strength Index, acts like the stock's pulse. And the report says this pulse is low. That's a sign of an oversold condition. Think of an elastic band that's been stretched way, way too far down. At some point, it's got to snap back, right? That's our one positive signal, fighting against the 2 negative ones. So, you've got this epic tug-of-war, a downward trend with fading energy, fighting against an oversold condition that's just itching to bounce back. Given this setup, the report lays out 3 totally different scenarios for what could happen next. First, the bullish or optimistic case. This is where that oversold signal wins the day. A wave of buyers could jump in, triggered by that low pulse, and push the price right past a key ceiling, what traders call resistance, at around $418. Then there's the flip side, the bearish or pessimistic case. Here, the negative trend and that weak momentum take control. That could drag the price down through a key floor or support level at about $388. And this is especially likely if any bad news about the company hits the headlines. And finally, you've got the neutral path. In this scenario, the bulls and the bears basically fight to a draw. The conflicting signals just cancel each other out, and the stock pretty much goes nowhere, just hovering around that $400 pivot point while everyone waits for a tiebreaker. So this is the crucial part. How do you make a decision here? You have 3 plausible paths forward, and they're all backed up by data in the very same report. This really gets to the heart of the matter, the core dilemma for anyone looking at Tesla right now. This pretty much sums it all up. The short-term charts, yeah, they're flashing warning signs, but the potential for a rebound is also really high thanks to that oversold condition. And then, bubbling underneath it all, the report points out that the company's strong earnings and revenue give you this foundation of long-term hope. It is a perfect storm of conflicting data. And that brings us right back to a really important line from the report's conclusion. Despite all the short-term bearish noise, it specifically says that the company's fundamentals, like its actual earnings, offer real hope for a rebound. It's a great reminder that these technical charts don't exist in a vacuum. And that leaves us with one last massive question. When you're looking at a stock like Tesla, what do you put more weight on? The cautious, maybe even scary story that the charts are telling you today? Or the optimistic, ambitious vision the company is promising for tomorrow? The data can point you in both directions, but in the end, that choice is the real investor's dilemma.